when we are in the real estate market, our clients rely on us to be the expert or give them an advice. And one of the things probably, or maybe me or all of you guys have been asked the same questions or not, you let me know, is about forbearance. Should we stop making our payment? What do you think we should do? Is everyone get asked that question from your clients, guys? Have you been like, if even you're a seller or a buyer, I wanted to have your opinion about if you got asked or you thought about doing it yourself, the forbearance, which is, it allows you to, or anybody, if you're a homeowner, to stop making the payment to your note holder. Your note holder could be the servicer between the homeowner and the investor. Is everyone hearing me clearly? Is everyone hearing me clearly? I just want to make sure that you're actually hear me, guys. Type something. Okay, Larry did. So what happened is that with forbearance, as a real estate expert, as a mortgage expert, probably we got between about in the first week of this, COVID-19, we got like 50 calls sometimes a week from previous clients. And they asked us if they should stop making their payment. And as an expert, I wanted to let you know, guys, what we think about, this subject overall. Forbearance, it is designed to help homeowners that are struggling with making their payments. It is designed to, if somebody asks them, are you having a hard time making your payments? If they are having a hard time, yes, take advantage of it. But if they can make their payment, advise them to make their payment, okay? And I know a lot of people think like they cannot put late payments. They cannot ding my credit. I understand that, Mr. Home Buyer. I understand that if you are a home buyer, because I asked a lot of my buyers, my homeowners, that they became homeowners, if they want to log in and listen to this as well. So I always ask them, can you make your payment? Because the monthly payment they are missing, they're going to have to make up for it at some point. It's not forgiven or anything like that. So basically, either they have to deal with it right now or they have to deal with it later. It depends whatever arrangements they're going to make with the servicer or with the investor. Okay, so basically forbearance is like, you cannot, you don't have to make your payment for a period of time, but eventually you're gonna have to make your payment. Now I wanna talk about the consequences of all the homeowners they end up having to to stop their making a payment or they're making a deal with their servicer. Do you guys want to know what is the consequences?
Yes.
Okay, so the consequences are, it might put that homeowner into, he cannot refinance, or he might not be able to purchase for a period of time. Because when they go apply for a mortgage, they're going to have to show that they did make their payments for almost, for 12 months, as you know. And forbearance shows, like when we go and verify their monthly payment history, it's going to show that they have been, stopped making their payments. So it might be the consequences is that, you know, the opportunity to refinance for a lower rate, you know, they might miss that opportunity, or purchase. Some people, they are thinking like, oh, you know what, if you can make your payment, make your payment. This is the advice. If you cannot make your payment, yes, you should be able to take advantage of those the forbearance. Okay. Any questions around that? Can you put on mute, Cynthia, so that way if they have a questions?
They can unmute themselves if they do.
Okay, anybody has a question, let me know, because as a real estate expert, probably if you are connecting with your old database or whoever is in your database, they might be asking you those questions. Okay, the second point I want to talk about is about low rates. It's opening a lot of doors for people to cash out, hold on, and refinance as well for a lower interest rate. Many of the people that they are refinancing or thinking about refinancing, the rate's been phenomenal. I have never seen that low rates in my 23 years doing lending only. I did real estate like 30 deals a month before I got into lending. So in the mortgage business, this is very, very low interest rate, especially when you have a loan amount less than $510,000. Write it down. Anything lower than $510,000, it's conforming loan, okay? And between 510 and 765.6, it's considered conforming high balance. And the rates change a little bit, but not, it's reasonable right now. It was much worse a couple weeks ago. So with the rates being this low, it's opening the doors to many homeowners that they are refinancing for an extremely low rate, or for the home buyers to get a mortgage, like, very, very low mortgage. So the advantage of it is I keep letting know my buyers, in the future, if the rate is 1% higher, your payment is going to be this much higher. Would you like to make the payment, this payment or this payment? And what is hindering you from purchasing right now? What would be, if you wanted to, what is it that you're not buying now, and why would you want to wait later, I don't know, when the rates start going up, and make that higher payment? So your purchase power is a lot stronger with the lower rates, and I can show them the formula and how much of a higher payment they're gonna make if they buy the same exact purchase price, same down payment. You know what I'm saying? So, I mean, whoever's taking advantage of this market, I think is extremely smart. I don't think the market is going to go down, which is, I will talk about that a little bit later. But at this time, with the rates being that low, we have tons of refinances, very extremely busy market right now for the mortgage professionals. We are doing a lot of rate and term, which means people just reducing their rate and cashing out. Looking at my clients and what are they using their cash out for, I see a lot of people, they are cashing out, holding on to their money. Some of them, they're like, you know what, I'm thinking to buy a larger home. I just want to have it as security in case I want to use it for another real estate transaction. And I have other people, they are wiping out their debts. So by, other debts, credit card debts. Some people, they have solar debt, whatever that might be, we're adding $40,000 and $50,000 to their loan amount, and their monthly payments actually lower than what they're making on their mortgage right now. So $2,200 monthly payment. Right now, I have, just at the top of my head, one of my buyers, he's pulling $40,000 or $42,000 out, wiping out all his credit card debts, which is gonna relieve him from almost $1,500, $1,700 monthly payments, plus his solar. And guess what? His monthly payments almost $200 lower than what he is making his monthly payment now. So people are taking advantage of that space as well. So they're, using their cash from, house improvement, changing the roof, adding an addition, and so forth. I just want to bring in something to the table as well. I want to talk a little bit about products. Any questions so far? You can unmute yourself, guys.
No, we're good, Hadia. I'm good, Hadia.
Okay. Hi, Anthony.
Hi.
Tina, do you have any questions? Okay. So now I want to talk about products, mortgage products, and whatever the forbearance is effective. Hey, Tina.
Hey, I do have a question, and I was on mute and I couldn't get off, and you went on. But you were, and I don't want to take your
No. We
your
have time.
presentation all the way back to the beginning. But you mentioned something that came in a little late about people who are paying if they have the forbearance. Some people are deciding to just hold on to their money, not make the payment, or some people are they just can't make it, period. So are you suggesting that the people just hold on to just make the pay? If you can make the payment, make the payment. If
Yes.
Okay. Because I've had people say they're just going to hold on to their money, though they can make the payment. They're going to hold on to see if they can just, if at the end of all this, their lender will just put everything on the very back end of the loan.
I have heard that they do have to actually rework the loan to be able to extend the loan to whatever period they have not been able to make their payment. So basically, if somebody missed the 12 months of payments, they're gonna have to actually rework and modify the loan to be able, because right now you have this loan and they just cannot just put monthly payments or additional months to the back of the loan. So they have to rework. After all this is done, they're gonna get a call and they're gonna have to rework their loan with them. They're gonna ask them if they can spread the monthly payment they missed over a period of time, or maybe they can make double payments, or maybe, something in that nature. It's gonna come along later, and we don't know what kind of solutions they're gonna have. So basically, I tell people either, have more debt on you, but I know they have to modify the loan to be able to add those missed payments to the back of the loan, Tina. So this is gonna come into the work later. Okay.
Okay.
Yeah, they're gonna have to deal with it with one. I mean, some people are extending it little by little, like, oh, okay, another month of, missing payments. Oh, by the way, another month of or two for, because of forbearance. It depends. They are really struggling, investors at this point. I just want to give you guys an example so you can understand what's going on, okay? The more you know, you might use this knowledge or not, guys, but at some point, at least you have organized, in your brain how it works. So basically, I want you to think about the tenant as the homeowner, okay? I want you to think about the property management, okay, as the servicer. So the homeowner or the tenant makes the payment to the servicer, which is the property manager. The property manager collects the money and gives it to who? To the home, to the owner of the building, right? Or the house. So you have to think about the homeowner, the owner as the investor. The servicer is the property manager who is responsible to collect those payments from the tenants, which is the homeowners, okay? So right now, the tenant is not paying. But in the mortgage business, the investor, which is the property manager, must make the payment to the investor, which is the landlord, no matter what. So right now you have all those servicers are going bankrupt. They don't have money to make new loans. The government is bailing out the big banks, which is like, Chase, Wells Fargo, and so forth. They're not bailing the medium-sized investors. So right now the investors saying, guess what? I'm not gonna have any more of this products. And if I wanna buy this product, I'm gonna charge 5 points to the buyer. So that's why 640 below, I closed a few transactions, but they were tough. They're getting tougher and tougher and tougher because they're so scared of the low income, low FICO score buyers that they're gonna ask for forbearance on those, loans that it's in the make. You understand that, guys? I want to hear something. I don't want to keep talking without no interaction. It feels weird.
Yeah, I got that loud and clear. Thank you.
So I want you guys to understand that whatever is happening right now with the forbearance, it's shaping what the new homeowners are, or the new buyers or prospects they're going to be getting. We're having like, I was able, like I said, to close 3 or 4 transactions below 640. It was tough because, and then they ended up paying points. So one client, she had it through a 620. She ended up paying 1 point at 3.625. This used to be not heard of. Nobody paid points. You understand what I'm saying, guys? So basically the investors, to purchase those loans, they are putting a high margins on those loans to be able to make them and buy them from us, mortgage company. So that's one, it's affecting that. The second thing is the people that they are having and allowed to have forbearance and they can work, which is the first one is the FHA loans. They did come up with a formula. Even FHA announced, like, guess what? you mortgage servicers, if you cannot take the payments, we are gonna give you the money that the homeowners are not being able to make it to sustain and keep going with your servicing the loans. Fannie Mae and Freddie Mac is not as much, but who is not included in this formula, and which is they can always foreclose on the homeowner right away, jumbo loans, non-QM, whoever got those hard money loans, bank statement loans, all those loans, the investor is allowed to initiate foreclosure right away. Whatever might be the system is, like in 1 month you send a notice, the second month, the third month you can start the foreclosure process and the stuff like that. So that's why we cannot find the products that we were able to have before. The other thing is with jumbo loans, it's a much higher risk loans. What's a higher risk to the investor? The last thing the investor wants is to foreclose on the property. All what they care about is for the homeowner making their payments on time. Mm-hmm. So right now on jumbo loans, in case there's a hardship and the homeowner could not make the payment, guess what's gonna happen? They can foreclose, and they don't wanna foreclose. So that's why they took a step back. They changed the guidelines. Now it's more down payment, which is, I'm not trying to get much jumbo loan business. I have a different way of getting it done. But like Bank of America, I had a couple calls from a couple of my buyers in Sherman Oaks area and in this, high-end area, saying like, you know what, we're in the middle of the transaction and now the guidelines have changed and my buyer needs to come up with 5% more or 10% down payment more. And of course, the FICO score, requirements had changed, right? So right. Now let's say we were able to do 680. Now I think it's 700. And I would tell my buyers 70-20 would be better. The other changes, reserves. They want to make sure the last thing is to foreclose or the homeowner cannot make the payment. Another question about forbearance. I have buyers, which has called me literally, and I'm in the middle of, I qualified them before. It's like, can I buy a house and start missing the payment and be on forbearance? I heard that I do not have to make my monthly payment. If we sense that any home buyer who is qualifying at this time cannot make the monthly payment, we are not gonna move forward with the loan. Nobody will. Because in our end, we're gonna have to sell this mortgage to the investor or to the servicer, whoever still buying those loans. And guess what? If they do not make the payments, it comes back to us. Right. And we have a window that client must make. I tell them, please, I had to close transactions right before this happened, and coronavirus and COVID-19 and all of that, and they called me and I'm like, please make your payment. I know my clients' financial situations and I know they can make the payment. Mm-hmm. So they did make the payment, and thank God I didn't have anybody call me and all of that stuff. So, but in the long run, jumbo loans products are much higher risk. Fannie Mae and Freddie Mac, their requirements is extremely realistic, but the FICO score requirements we are seeing changing. I know that a lot of other lenders saying, oh, you know what? Oh, if your lender cannot do less than 640. Everybody, we find still investors to do those loans. I'm saying it's a little bit difficult. And especially when we are brokering a deal, it's out of our control sometimes. I mean, it's not like when I am sending that file to my underwriter that's been underwriting my files for the last 2-3 years, and I know exactly how she thinks about the files. So it's a little bit skeptical. And I mean, I don't want to, you know, but we're still taking them if you do have it. And another way of helping the clients to improve their FICO score, which is, we did that with a few of the clients and it was a success. And that really helped us to keep it in-house, to close it within 12 days instead of 30 days, of 35 days of calling and checking, and all of that time and energy you know, that the file takes when we are not in control of the file. So in this time, FHAs, either we counsel people to get their FICO score over 640, or if they have everything in a place and we discuss with them like the interest rate for lower than 640 FICO score and they're okay with it, we still can do those. We can broker them out. We can do them between 30 to 35 days. But usually the first thing we look at if they can raise their FICO score, which is like, we have tremendous success of doing so. The third thing on FHA, they tightened a little bit the debt to income ratio. Okay, so the DTI usually we would have went to 56 point, let's say 5 on all other, you know, prior to this COVID-19 on any FHA loan. And now many investors, they want to make sure we stay within 50% DTI. What that means, it is actually making the buyer much more comfortable with their monthly payment. They don't want people to have issues not making the payment again. A lot of the biggest investors I worked with before, I call them periodically, they call me, and some of them, they stopped all government loans. Some of them, I'm not saying it's out, but that tells you how the market is reacting and the investor reacting to this, you know, changes. Like, they don't want it to have any home buyer with not being able to make their payments. Again, so if you have buyers call you, ask them, can you make your payment? If they say yes, tell them, you know what, it will save you a lot of problems later. You would be, you know, you would not be able to buy if you have missed 6 months payments in the last 12 months. So in case you want to refinance to this an amazing rate at this point, you're not going to be able to. So you're cutting your chances from great opportunities. Any questions on that? Please bring in your questions, because I wanted to, when somebody has a question, everybody's going to benefit from that question as well. Who is, who has a question?
So is there any, oh, go ahead.
No, I'm sorry, go ahead.
I was gonna just say, is there any benefits for somebody that has good credit, let's say like 750 and higher at this point?
What did you ask again, Anthony?
We were talking about people with low credit scores not being able to get a good loan at this point, but is there better programs for people with better credit? Like people who have 750?
Yeah. Anybody, I mean, even over 640, they have, I mean, it's still the normal turnaround time. We're still finding a couple investors that they are buying it straight from us, so we're not having. So basically, anybody below 640, we qualify them. I look at their credit. If there's any way with a little bit of help, can get them to 640 so they can get a better rate, better without points and this and that. And if they wish to move forward the way it is, and there's no way of increasing their FICO score, we close them below 640. But I mean, there's still FHA, conventional loans with low FICO score. Usually we have hard time with the rates because usually conventional loans, it's a FICO score driven, down payment driven, and DTI, it makes the FICO, you know, the rate better. So conventional loans are much more FICO score driven. FHAs is not. So that's why when somebody has less than 680 FICO score, and I look at their down payment, usually most of the time we go FHA with those buyers. But yeah, 640 and below, they're not gonna get the rate that 680 FICO and 700 FICO score. We are, let me tell you about the rates. Anybody who has lower than $510,000 loan amount, FHA 660, 680, if you get to 700, 2.75, 30 years fixed. That's how low is the interest rate. Yesterday, I had the pleasure to work with somebody, which is, you know, another client. I've been working so much on referrals these days. You have no idea, guys. I'm loving it. And I appreciate it. So 2.5 or 2.375 for like 15 years fixed with decent FICO score. So the rates, you cannot beat what's going on right now. Okay, so this is a great point to approach your buyers.
Hadia, so would they have to come up with more money if they are below the 640?
So the two cases, I can tell you about live cases that I had to work with. One is 637 FICO score. They were able to get 3.5, right, Carol? 3.5 with 1 point. I don't know what's going on right now at this moment, but we did have to give 3.5, which is in the normal over 640 FICO score. It's like, let's say 3.25 with no points. So you understand the difference?
Mm-hmm.
So it's not bad, but you know, we work, I mean, whatever area you're working, our area is not with the people that they want to pay points or like, you know, they don't want to put monthly down payments.
Mm-hmm.
So, you know, did that answer your question? Gives you an idea what's below 640 FICO score? Less than 620, it's even worse, much worse. Very rare to find anyone to do less than 620 or below 600 nowadays.
Mm-hmm. Hadia, you have a question. This is a good one in the chat. It says, Hadia, many people ask me if they file for unemployment due to COVID. Will that affect them in qualifying to purchase in the next couple of months?
Excellent question, Wendy. You know, so what happened is you gotta be back on your job or working status to be able to get a loan. If you're on unemployment, we cannot use the unemployment income to qualify you for a home loan. Now, does it affect you to be a home buyer? Not whatsoever. The minute you go back to work, we can pick up that first paycheck and qualify you based on the income you're receiving after you go back to employment. Does that answer the question, Wendy? So yeah, verification of employment, it's, you know, verification of employment's becoming as well, it plays a big role. What I'm talking about, like previously, we always get written verification of employment before close of escrow. We picked up another verbal verification of employment. Nowadays, we have to have one at the beginning when we submit the file. We gotta have sometimes another one before closing, and right at the time of closing, they're still gonna give the employer a call to ask if you're still working. Those are the questions that the investor wanted and must be answered by the employer. Are they still employed? Are they still full-time? Are they still working? If they look and we gave you overtime or commission or bonuses, do those incomes still exist? So we have to answer all those questions. And as you know, some of the buyers in the middle of the transaction, they cut their hours. You know, so basically, is this still can qualify? Yes, they do, but we have to consider the new hours to qualify them. So if you are 40 hours and now you are 32 hours, working hours, so we're gonna have to cut your income for the 32 hours. So if you are buying and you're maximizing your debt to income ratio, and here it is, it happened to us, which is we were able to pay a little bit of debt, one debt on the people's credit report to offset the DTI. So whoever lender you work with, they gotta have a lot of good imagination, great imagination.
You know, I've been doing the loan signings, and it's I've been seeing they have like most of the package now have 4 different forms that ask all the same questions in different ways about employment. Has your situation changed? Has your employment, your hours, and all that? And I make sure I stress all that. Like, and I ask them, they look at me like, you just asked me that. I'm like, I'm telling you right now. And there's a form in there that says some of the lenders have been putting that mortgage fraud, mortgage fraud is punishable. I mean, isn't it? And so I have to go over all those things, and I'm like, wow, like people, but I think people are thinking, well, I still have my job. And I'm like, you have to be honest. You better be honest,
Yes,
because if you
yes,
turn around,
yes.
you have all these documents.
True. You have to be honest. And one scenario that the client didn't let us know that he was let go, and we are doing our verification of employment, like literally we're funding, and I had no clue. And we were not able to, but if they pick up another job, I do ask the buyers to get a letter from their employer, like a word letter saying, you know what, you're starting at this day, whatever, and with first time paycheck. If they have been within 6 months of not working, we're okay with that. So it's not a big deal. I had a client in the middle of the minute she got into transaction, she was let go, and she picked up another job, and we kept the same transaction going. She was like the minute they let her go, she had lined up so many interviews right after, and she got another job. Government jobs right now, I mean, Northrop, the Air Force Base, all of that stuff. I mean, I've been getting so many referrals from each other. Like I help one person and then his friend and then it's such a blessing because those are still employed and they have decent income. But as far as products, to be honest, at the beginning, it was a little bit worse than now. So I can see that they are loosening up than a month ago, okay? But still everything applies. But at the beginning, they were so scared to fund any loan. Right now, I feel like they're loosening it a little bit up and freeing some of the guidelines. But I don't know when we're gonna go back to exactly the same way. I don't see any much different than like being cautious and doing literally their job of making sure those people still employed. The second thing I want to let you know how we can verify self-employed individuals at the close of escrow. That's a great point to bring up. So basically you have self-employed individual that is doing, let's say, they own their own business, right? And they give you 2 years tax returns, right? And now we base everything on the last 2 years. Now, a couple things comes to play. Some of them, I mean, they might ask for audited financials. Like we always supply profit and loss and balance sheets for those individuals and those buyers. Right now, they might be audited. What's audited means that it has to be prepared by their accountant and it has to be signed or stamped by their accountant. What does it mean? And whatever they ask for the last month, their business bank statement, guys, to see that there is deposits going into their account to make sure they're still employed. Okay, so basically, let's say I am running a daycare, right? I'm self-employed. I showed beautiful income for the last 2 years. I qualify beautifully, right? But how can they make sure you're still making the income? We ask for last 30 days bank statement, transaction details showing what's going on in your business account, okay? If you are, that's one of the things that we prepare the buyers ahead of time. Let's say you are a real estate agent, right? Guess what? They might ask for 30 days history to see if you have it, or your commission check, at least to close one transaction showing that you have closed something in the last 30 days that, you know, that's income coming and you're able to make your payment. Reserves are changing as well, like I said, but not much on the normal loan amounts, but on the jumbo loan, they want more reserves. But make sure, like if you have, I have clients that they don't want to use that much, you know, or they don't keep money in their business accounts. I prepare them from day one. Please deposit your money. If you get paid cash, go ahead and deposit it in your business account. If you are getting paid checks, and keep your balance healthy. So if you are having a buyer and they are getting qualified right now, make sure the lender prepare them from day one, so we would not come into the like 2 months from the day we qualify them and they didn't know. So we prepared them, because some people, they don't understand why you want me to deposit all my, you know that, right? Some people, they don't deposit all their cash, whatever they get paid, on their business account. They don't want to pay taxes or whatever that might be. But you prepare them from day one. Okay, so preparing them is the key. don't deposit cash. Make sure when you guys writing an offer, you gotta find out where did they give their EMD, you know, so that way you do not have and delay the process later. What else they changed regarding COVID-19? We get always, every day we get emailed a COVID-19 guidelines from the back office. So the COVID-19 is audited profit and loss statements for, you know, or like we need this. Oh, by the way, that's a great point right now that I remember. We have a lot of buyers, they came in to qualify and they have rental properties. They get their money from their rental properties and from their investments, right? So a lot of buyers, they have like apartment building, or they might have 3 houses. How can, as investor, make sure that those people are still paying the rent? Guess what? They might ask for, they did ask that before. I didn't have that recently scenario, but I did it like a couple weeks ago. They had to ask for a tenant check. So the tenant wrote a check, the buyer deposited in her account, so I got a canceled the check.
Mm-hmm.
So that's one of the things that how they are going into verifying that the income is still coming. You got me, guys? So they're finding a ways to verify. That's what it is. So I tell people, if you are going cashing your whatever or giving you cash, from day one, make sure your tenant gives you a check. I might have to ask you for a copy of your, you know, rental checks. So preparing them so that way, if they need some time to talk to their tenant and say, you know what, Mr. Tenant, every single month, if they can deposit to their account, it's perfectly fine too. Because a lot of people use that income to qualify for a home loan. Okay?
Okay.
Okay. So just stuff like this that you make aware. You're not the lender to prepare them, but if your lender does not do like too many transactions a month, they might not know, oh, when I am, you know, qualifying, when am I qualifying someone with the rental income? Make sure you tell your lender, guess what, my dear, make sure you this is one of the guidelines that might come up. So prepare the buyer for in case we need it at the end, okay? So it's a teamwork. All what you have to do, the finishing line, closing the transactions, which is a lot of people missing, they get distracted. It's like, what's the main goal? Is closing the transaction. If the information comes in from you, if it comes in from your lender, whatever might be, you have, if your lenders doesn't know, you know, or you vice versa. We complement each other. Lender and realtors complement each other. We compensate for whatever you don't have, you know, and vice versa, right? True?
Right.
I mean, you can, guys, unmute yourself, because the transaction, it's like, I tell people of, it's like, can someone build a house by themselves? They're not. Somebody has to lay the foundation. Then another person comes in the concrete, and then the other person, the framing, and so forth. So everybody has a different job, but if one is not doing their job, the other one comes in. Sometimes you have to compensate for whatever the other person may be. So that's why I tell my realtors who I'm really work close with, it is literally a teamwork. I support them 100%. They support me 100%. Some buyers might not be happy with one little thing here, or that's when the other person comes in to influence them, letting them know that, you know what, I mean, this is their job, this is my job, come to me if, whatever. The main thing is to service the buyer, where when they finish with the transactions, they're gonna say, you know what, wow, what an amazing teamwork. So leaving that amazing taste and good taste, it's like, oh, buying a house, it was not that difficult, I can do this again. So those changes, we have to prepare the client. We have to prepare the how you guys preparing your home, the sellers, of like how they are marketing right now the properties, and how they're showing the properties. The same thing with the COVID-19 guidelines as far as the mortgage business. We prepare them and lay down the expectation of what might happen. So at least making them aware what's the changes, and they might ask you for this from the beginning. If you know something is gonna be asked for, it's better to ask from them at the beginning. People don't like surprises at the end.
Right.
Any questions? Any questions?
Hadia, I have a question. Does VA have any forbearance guidelines in place?
I have been closing a lot of VA loans lately, which is, I love VA loans. No, not whatsoever. They do follow government guidelines, like whatever the FHA guidelines are, the same thing with VA. They do have a case by case on FHA and VA. If we have to pass 50% debt to income ratio. So like I told you, on VA loans, we used to go up to 60%. Whatever DU accepts the client, we were able to fund the loan based on whatever DTI DU approved it with. Like literally at some point, 70% debt to income ratio for my VA borrowers. How does DU works? DU takes all the information that we put in our software, which is our software, our origination system software, it's called Encompass. We pull the credit through Encompass, we put the buyer's history of employment, their income, and DU extract all this information, form an opinion, which is a computer, and gives you an approval. So if I look at, if the DU looks at like good credit score, good, income, good, no missing payments, they are a little bit tougher sometimes on VA as far as credit than FHA. VA don't like collection accounts. And so if they see everything looks fine, it could go up. I have seen it as, I closed deal at 70% debt to income ratio. But right now they are putting a little bit lower debt to income ratio. So they have capped it. Even DU gives me an approval, I can go up to 55%. It all depends on the compensation factor of the buyer. So history tells a lot about everything. If somebody has a history of not making their payments on time, it's going to reflect on what's their FICO score and what shape of credit they have.
Right.
So as well of everything, if the system reads you've been in same employment for 5 years, whatever, instead of reading 3 or 4 employers for the last 2 years, you understand? It forms an opinion. It's a computer generated opinion, and it literally, they make it so good that to the point. And sometimes I don't understand why on some clients, the DTI gets approved at a higher than another one. But when I look, these days they change the DU a lot. It's not about your FICO score anymore, about the buyer's FICO score, sorry, anymore. It's about the debt that you have on your FICO score. You might have made every single monthly payment on time, but the minute they read your maximized or your balances and you have high debts, even the DTI is okay, they see it as a high risk. So I tell people all the time, my buyers, when they cannot see something, I make them see it by giving them an example. If I'm going to your house and buy piece of your furniture or piece of your car, or whatever, and I tell you, guess what? My income is $10,000 and my monthly payments is $8,000 every month. And you're gonna look at me and say, okay, so you're living of $2,000 for your living expenses. What happens if something happened to you? Are you gonna be able to make the monthly payment or whatever? Are you gonna pay your car payment or same thing? So as a person, look at the situation from your point of view, and you can relate a little bit better. Why? Because you get those questions like, oh, but they have 800 FICO score, or my buyer has 750 FICO score, but their debt, they have $250,000 student loan. I want you to understand something about student loans, that way before in this business, well, a few years back, if they are in, forbearance, or they are, what do they call this? Something about like they don't have to make the payment. We used to go to the student loan company, and as long as they give us a letter saying they don't have to make their payment and they're in school for another year, we didn't have to hit them with the payment. Now it's 1% of their loan amount. So if they have $250,000 educational loan, and it shows zero payment on their credit, we have to hit them with $2,500 payment. Okay? I have a client the other day, he's been shopping for rates. Every 2-3 days, calls me for just to ask for the rate. I give him the rate. Your FICO score is this, your loan amount, all of that good stuff. And then the other day is like, but I have $400,000 student loan. And I said, okay, that's $4,000 payment that I must calculate against your, I have to put it as a liability against you. So Mr. Buyer, what's your income? Well, $9,000. That's almost half of your income. And if your DTI is going to be cannot exceed 50%, I have no idea how they qualified you, but if you want me to do a good job for you, this is what I need. So stuff like that. I mean, that's another thing where like clients like, but I'm not paying, I don't have to make monthly payment on this student loan. Doesn't matter. We have to 1% of the loan amount, that's going to be your payment. Any questions? Anybody has scenario right now they are struggling or have questions with, or just let me know. I'm here to help to the best of my ability. Jumbo loans, I talked about the low rates. Everybody's taking advantage of the low rates. I mean, if you have refinances, guys, send them to me. I love refi business. So I have some of my realtors call me all the time. Hadia, do you do refis? Of course we do refis. So just send them this way. We can analyze their situation and see how we can help them, to lower their monthly debt or cash out. I need some feedback.
Okay.
I need you guys to tell me how's your buyer's business, like purchase business. Are you having do you see more buyers in the market, less buyers in the market? What's the reaction? What excuses buyers have? Judy, Alicia, Gus, tell me.
I keep hearing that everybody's waiting for but you said earlier that it's not going to level out the home prices. I keep everybody here saying that they're waiting for the
Lower price.
lower home prices. Yeah.
So true. The same thing with me, because I try to get in touch as much as I can with my past clients that have been qualified. That's a great point that I wanted to talk about, like how the market is shaping up. I mean, you guys listen to a lot of real estate advisors trying as much as they can look into what the future and the shape of the future is going to be. Is that correct?
Yeah.
Yeah.
If you don't have your company or yourself digging into the basic, like, I mean, I don't know. I mean, I hear realtors in my circle all the time. And I listen to some of their what's happening, because you need that kind of visionary, or like somebody's directing the ship, where that ship is going. Sometimes it's not 100% what they say, but at least they are helping you see the future. Is that correct?
Yeah.
Right.
Okay.
That's correct.
So that's why you are in a company to see the future. And believe me, those people that they are the one who's gonna take you to see what everything. I don't know if you guys, but I tap into a lot of, because the mortgage directs a lot of the real estate business, and and vice versa, right? Demand, supply, and all of that good stuff. So I have heard both arguments, where the real estate market, not this year, probably at the beginning of February or March of next year, we might see prices go down, and a lot of sellers, which is more sellers, more supply, it will drive the prices down. And I have heard the other argument is, whoever is taking advantage of this market right now, they are the smart one, because as much as there's not enough inventory, as much as like the buyer might have a little bit chance to negotiate better than what was happening at the beginning of this year. It was hard to negotiate closing costs, negotiate anything. So now there's a fear from the sellers that might not find another buyer, so they might negotiate. And here is the buyers that they were not able to negotiate. I can see like a little bit, I have not seen anybody of my buyers were able to negotiate less price than the listing price. All my buyers, if they're not offering the listing price and above, and if they want to negotiate closing costs within the purchase price, they're not getting the deal. So
Right.
that tells you that the demand and the supply, actually, the demand still is higher than the supply, because I have a buyer been in 6 months looking, and right now he's desperate to move out of his house. He had to pay almost $17,000 more than the listing price to get the house.
Wow.
So that, so that
Yeah.
tells you like the supply and the demand it's so basically, if you're a buyer and you're a smart buyer, you might negotiate better than before, you might not. Sellers are like open sometimes to look into like, you know, is this a solid buyer, and let's give him some incentives so we can close the deal. So I can see a lot of checking on my buyers. I have never done a backup of pre-quals as much as the last, you know, 5, 6, but I'm still qualifying home buyers all day long. I've been getting calls all the time. And the thing is, if I'm looking at this correctly, I have a lot of investors too. I have people calling me, they want to invest, they think that it's the right time. So I have 2 arguments. I have heard arguments with the visionaries that are saying the market's going to stay strong and it's going to be even stronger next year. And I have heard like, you know what, is if this pandemic is going to keep going on like this for a longer period of time, you're going to see people a lot more in need to sell at the beginning of next year. And I heard like at this time, government is really helping home buyers. They are committed to not have this economy fail. The United States economy fail. The government is really working hard not to see the economy fail, right? So I don't know how long they're gonna sustain this. So I think the future depends on how long this is gonna last. When people can go back to their work normally, normal hours, normal workforce. You understand what I'm saying? So at this time from now till the end of the year, the rates is gonna stay low, especially on election years. They're not gonna raise the rates, and the rates affect the real estate business. If we kind of go 1 or 1.5, like it used to be 4.5, a lot of people might back up, but a lot of people are enthusiastic about the rates, and they are understanding how important their interest rate in their purchasing their real estate. So they are making the move right now. Whoever is smart and know how it works, they are making the move now. I tell you right now, you're buying a house for $450,000. In 6 months from now, and you got 3% interest rate. In 6 months from now, the house is worth $400,000. Your payment right now is still gonna be lower, even, and let's say in, like I said, 6 months from now, the rate goes up to 4.5, but the house went back to 500,000. Your payment right now, purchased at 450, will be lower than 6 months from now, even if you purchase that house at 500,000.
Right.
You understand what I'm saying? So basically, there's no loss. But you gotta have to be able to explain all of that to the buyer, where they understand that the rates right now, no matter, even if it goes down 10, 15% in 6 months from now, if that's their fear, their payment is gonna be lower at higher purchase price with lower rate. The rates are phenomenal. Phenomenal. Sam is calling me every day. Did you refinance the house? Did you refinance the house? I have time for everybody except us, right? But what I'm saying is take advantage of it if you are owner, or, you know, enlighten your clients and consumers. And it is actually a time I've been practicing my mind to accept being on calls, on video calls. So I've been calling a lot of clients. I text them. I said, can you give me a time so we can meet online? Okay. And guess what? They call me Zoom call or like FaceTime call, and we connect. So you gotta get used to be comfortable being in front of a camera, that's the message, because right now we are in isolated places. I'm at my house today. I have my 2 assistants here. I have other 2 assistants at their houses. So it was a different time where you can turn and tell your assistant whatever you want to tell. So basically now you gotta get used to get online, type your email, communicate a lot more through computers and Zoom calls. And to be honest with you, I connect with them as if they are in front of me. And when they see me, hey, Hadia, I cannot believe I can see you. I could not put the face with the another story I'm going to tell you, which is we never think about it that much. The minute you're with the phone on the phone, while with them on the phone, send them your link for your Facebook. While you're with them, oh, by the way, do you have accounts, da, 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 da. If they say yes, I send it. I make it a point right now. I used to do it hit and miss, but right now, literally, to know about who you are working with, I didn't think about it before, but I have it, people's like, hold on, let me check you out. So what you put out there on your social media, it's extremely important.
Right.
So if you have a client that is, I mean, I have clients, the minute they see my social media or my reviews, that's like, you know what, I'm in a good hands. So that's the only way they can tell if they are working with the right person, or they, you know, they're comfortable to go on. Otherwise, it's just a voice on the other line. So put it like the minute you talk to the client, by the way, I'm trying. I'm not telling you I'm the best. I'm not telling you I'm the expert. But what I found out is like sending them a message over your phone, like record it. Hello. Hi, Lori. We just spoke. I just want to put, you know, I want to record this to introduce myself, you know?
Yeah.
So that way they feel like a little bit more connected to you, and it's not another person they're talking over. Whatever I can do. A lot of people that worked with me personally, they know how dedicated I am to you guys and to the clients. But at the same time, being accessible these days is like, did this change? Did that change? I see it a little bit different than before. Like, Hadia, I have this client, he said so and so. Is there anything changed at this point for this scenario or not? Any questions? I love questions. I love going above and beyond to help anyone. The main thing, it doesn't matter who's, you know, closing your transaction. The main thing is what? Closing your buyer. It doesn't matter who it is. It's just making sure you're servicing them well and doing the best for them. And you know, I mean, you don't look at the client right now at this time. Every client I look at it is a lifetime client. So what that client could bring me, like in transactions, and I swear to you, they could be your extended family. Some of my clients, they're so dear to my heart, like we've been friends, and they check on me and I check on them. So as much as we are on distance and over the phone, and we're not being able to see that many people face to face, but you can make it as close relationship as you can be through either FaceTime or adding value or adding information. So be the source of information that they can go to you. But it doesn't, you don't have to know everything, but you know that we can find out all the information we need. Some people, they don't want to get into the computer to find out and read maybe 3 pages to get the answer. So it's easier for them to call the expert, right?
Right. Right.
So be the expert. Even if you're not the expert in that field, find someone that answers your question. And a lot of people ask me about the PPP, which is I don't know. I have not applied for it. I don't know how it works. But I have a friend. He's in the in the banking business. I picked up his brain the other day, so I have a little bit more information. So when I wanted to give information, I know what a little bit what I'm talking about. And I actually might have a meeting with him just for him to explain what could be hard for the business owners to fill out on those applications. Just adding value. That's my thing is like, if you add value to the client and the client sees value in you, they're going to run back to you guys.
Right.
I want everybody, Frank, Ramon.
Yeah, I just wanted to say a comment that I really enjoy your Instagram posts, your videos.
Oh, really?
Really enjoy those. Yeah. Who shoots them for you? Just curious.
Somebody I know, somebody we hired actually.
Okay. Yeah, they're really good. They look good, and the content is excellent.
We are trying to find pieces, not too much information, so that way can just see that just that one piece of information. Like, let's say if you are part-time employee, just that question and that answer, so people can retain more than like too much information at one time. So like, you know, if you are self-employed, how many years of taxes you need, how many, I mean, I had a lady, maybe she called me 6 times in the last 2 days. She's still telling me, Hadia, I was an employee, I was a caregiver, and now I'm on my own and I'm running my own business for the last 6 months. Why I cannot get along? And it doesn't matter how many shapes or forms giving it to her, she's still having a hard time to process why. So as a self-employed business, if you were a wage earner, you switch, we need 2 years filing self-employment taxes to be able to look at your income and make a loan for you. So I just want to let you know, we do have 1-year programs still exist. So if a self-employed person been in the self-employed for the last 5 years, I can take the last year income to qualify them, which helps too. So you gotta like kind of, it is hard when it's not one size fits all in this business. So each one, how do we look like right now? Each one of us looks different. The same thing with the mortgage business. There's nothing the same. Not even how long I've been qualifying people and working with the clients. I have never seen one scenario exactly like the other scenario.
Hmm.
Come on. Come on,
True.
Nico.
What's happening?
Talk to me.
About? I just got here.
I know. You always call me for questions. I need your questions right now.
Oh, is the jumbo market still closed? The jumbo loans?
Like I talked to everyone about it before, very few investors that we still can work with actually in the brokerage world. We used to do them in-house all day long. Now we don't do them in-house. We have option to broker them out. We have 1, maybe 2 investors. The guidelines been tightened up. The FICO score has to be higher than before, and the down payment has to be a little bit higher than before, more down. The loan to value has to be lower, of course, and the reserves shape, you know, they want you to have more reserves. They do still require 2 appraisals, maybe 1 drive-by and 1 full appraisal. So yeah, they are tightening it up. It's not too much pleasure because they're trying to make sure that a client is for sure gonna make his payment and is not gonna miss any payments, because jumbo loans is not it's not included in the forbearance. So if the client cannot make that payment, the investor has the right to proceed with foreclosure per the guidelines, like after 3 months, after 4 months, there is rules how you foreclose on someone.
Have they loosened anything up as far as the restrictions for the lower end loans, or is that everything still the same?
So below 640, we still brokered them out. I have closed a few. It was a little bit tough because I had to work with people that literally, I don't know how their system works, but we got them done. The only thing with those at the end, with the investors, so crazy how many times they do verification of employment. So let me give you a scenario how hard it is. And I want to explain this, not because I want to explain it. I want to explain it because I want the realtors to calm down and be patient, not because of the lenders not doing their job, because the investors who is willing to fund that loan want it to do like 2 or 3 sometimes written verification of employment. So I had somebody with the IHSS, and guess what? IHSS had to take 5 days every time you ask for written verification of employment. And guess what? They wanted to do one 10 days before closing, and they wanted to do one at closing. And guess what? If you're not gonna fund my deal before you receive this, it's gonna delay it another 5 to 7 days. Got it?
Got it.
So I want you guys to understand, if you're not, when I do it in-house, it's fine. But as well, the investors taking what the job is essential and non-essential. So let's say right now they're opening it a little bit up because a lot of people went back to work. Like I had a hygienist, and of course it was non-essential. Even though we were in the middle of the transaction, I couldn't close it. Right now he went back to work, he got his first paycheck, and we're in our way to close it, right? But let's say I'll give you, I mean, each scenario, each employment is different. A valet, okay, do you think valet is essential or essential?
It's non-essential.
So basically it's not needed. Of course, all malls or restaurants, everything closed, right? So do you see valet parking needed right now?
No.
So two of my buyers, they're both valet parking employees. Okay, but they're still getting paid. Even they're still getting paid, they wanted to make sure that they are going to continue to be employed, because sometimes the employer might keep you for a bit.
They might not.
They might not. Absolutely, Nico.
Yeah, I know a few employers that have started rehiring, and they're not even rehiring all the same people. They're rehiring some of them are all new people.
Yeah.
So that's.
So valet is not essential, right? Job, right, guys?
No.
Okay. So here it is. My guy gets paid $4,000 a month, and he still gets it paid, and I can see it going to his account, everything. So my funder and my underwriters like, Hadia, can you explain to me how long he's going to stay in his job? Because he might get paid for another month or 2, might not be. It depends how long this is going to take. So I called him. I said, hey, Mo, I mean, he's like, this is my 8th transaction with him over the last 10 years. And he said, Hadia, my job is not a valet where like a restaurant valet or a regular parking spot or parking lot. I am a valet on a parcels or lots where the machineries gets parked there. So the big machinery is parked in his valet and he gets paid from them, that the employer, his employer, and the employer pays him. So he has a regular job to go and check the equipment. He has employees under him to make sure they mandate that part. So he explained it to me. Oh, it makes sense, right?
Right.
And do you know, so this is the difference between when I'm doing the loan in-house and when I broker it out. I put my quality control lady on the loan with him. I said, hold on, I want to solve this right now. Let's put him on a three-way call. We did. He explained it in his own language. She heard his voice and boom. But literally, like, they're not going to take whatever you're getting paid and then say it's okay because, like, you know, now realtors, they're not selling as much as they used to. So you used to do 5 transactions a month. It might be whoever is working hard. Believe me, I'm getting from one person, I get like 3 pre-quals a day, but he's on his phone all day. I'm getting so many clients to pre-qualify for that person. And I don't know how he's doing it, but he is on his phone, I'm positive, all day, contacting past, future, internet leads, whatever that might be. So is there buyers? Of course there is. It's just people get used to get them a lot easier than these days, right?
Right. That's true.
That's it. But the buyer's still there. I mean, if I'm still pre-qualifying that many buyers a day, I know they're still out there.
I just got 2 pre-qualified with you recently.
Yes,
Oh.
and one in escrow.
I have one in escrow, and then I have another one that just got pre-qualified.
You are working hard. I know you call me all the time asking me questions, and that tells me like you are in contact with many buyers, sellers, whatever that might be.
Just gotta call them.
Yeah, and you have to find, guys, a way to like being on video calls, being on video, because right now we cannot see you. Even like church meetings are on Zoom calls, right?
They sure are.
I have a refinance question.
Mm-hmm.
So, if you guys don't mind, I have a client. They're cash earners. I told them in order to get a loan, they're gonna have to have somebody who has provable income, whether it's their mom or something like that. But the loan would be under their name, and they would be added to that loan. When they refinance, even though they've been on the loan as a secondary or what have you, as a cosigner, do they still have to have the provable income in order to refinance, or can they use their cash when they refinance because they're cash earners?
So, and they don't claim their income.
Yeah, they don't claim.
So I don't know if I got the question correctly or not. So basically, let's say I own a house, okay, and I have no more income, and I cannot qualify if I want to qualify. I can bring you as my partner, and we can refinance the house, both of us together. But I cannot refinance the house under your name if you're not on the title for at least 6 months.
Yes. Yeah. So let's say it's a young couple that are cash earners, and their mother is the person that has the loan, right? And they're put onto that loan. The couple that are cash earners. In 2 years or a year, when they want to refinance, Unless they have somebody with provable income, they cannot refinance.
Nope.
Okay.
And whoever they're gonna bring into the picture, either they're still gonna be on the loan, or they have to quit claim it, or not quit claim it, like add them to the title 6 months before they refinance with that person. So if I'm gonna refinance with you, I can
You gotta add
refinance
me.
with you. Or if I'm not gonna be in the picture anymore, it's gonna be just you. You have to be on the title for 6 months.
Awesome.
Okay,
All right.
and sometimes they're gonna ask if you are making that payment before
Awesome.
sometimes, but I mean, it's a good question. Monica, are you with me?
All right, I gotta head out. Thank you, Hadia.
You are welcome. So what questions you have that I can help you with? Alicia is typing. Can I hear you, Alicia? Can I hear you?
Hello?
Hey.
Can you hear me?
Yes. Yes. Go ahead. Talk to me. Alicia. Can you hear me, Alicia? Hello?
Yes, I can. Yes, I can hear you. Can you hear me? I'm sorry.
Yes. Talk to us.
Okay.
How you doing?
I'm doing great. Thanks for asking. I'm enjoying your class. All this information is great. I'm actually new in the business, so it's really good information.
At the beginning, it seems like a lot of information, but you will like kind of, as you start having specific questions, then you learn that question. It's like, oh, what happens here? What happens? I tell people, listen and get as much information as you can, but later on you start dissecting the information, saying, oh, okay, that's what I heard somebody saying, but I really need to know if this belongs to my scenario.
Exactly.
And I always say, you cannot go to build a house without your toolbox. So you have your tools. So your tools could be your resources, whoever you can rely on, or it could be your knowledge as well as you go on with this business. But you need your toolbox, whatever that might, you can go and to your toolbox and say, oh, okay, this is an escrow question, let me ask escrow. This is a title question, let me ask title. And as you know that you have plenty of questions, but I tell people, Google them. I Google so much, you have no idea.
Yeah, but the same. Like if I want to know something, I Google it, and you find your answers there. It's great.
Yeah.
Do you do any IT like?
So all the specialty programs, great question, Alicia. All the specialty programs are non-existent right now, like bank statements program, hard money loans, stated, all of those funky programs that they came in because the market was so healthy. And I just want to give, they're no longer available. I'm gonna be giving you some statistics, and that you guys, whoever staying with me, I just want to give you some statistics that I wrote it down. Let me see where it is. Okay, so I'm gonna do another session about 2008 and now. Okay, so remember when the market crashed in 2008, guys?
Yes.
Yes.
It's not the same what was happening right now. It's nothing. You cannot compare it. So I'm gonna do in a session next week about it, but I'm letting you know, which is, I'm gonna repeat it, there is about 128 million homeowners, okay? 64 to 65%, they own their homes free and clear, okay? 50,
Wow, what percent? I'm sorry, what percent was that?
64 to 65%.
Okay, wow.
Oh, no, sorry. 40% has no mortgage payments. Like they own it free and clear, 40%. Okay? You're with me? Around 60% that they do have a mortgage payment, they have about 53%, around 50 to 50% equity in their homes. So basically the market is not like 2008 whatsoever. So 40% of the homeowners that they own homes, they have no mortgage payment. The other 60%, they have about 45% equity in their houses. So they have a lot in stake to lose those homes. It's not like in 2008 where everybody was underwater. You got me, guys?
Yes, Hadia.
Yes.
Yes, yes.
So that tells you the market is not gonna crash. Because if I have 40% or 50% equity on my house, I'm not letting go of my house. The only time people do leave their homes when they are underwater, when the value deteriorates so much and their loan amount is still much higher. So I just want to give you some statistics. I'm gonna be doing a session between 2008 and now. There's nothing the same. Okay, guys?
Okay.
Sounds good. Sounds good.
Okay, sounds great.
Are you with me, Zach? I can see your name. Did you put me and you leave your computer, Zach? Zach is on with us. Judy, I do appreciate that you joined me, guys. I really, really miss a lot of the people I work with. Thank you, Anthony, for joining me. By the way, Anthony, he is my preferred insurance, homeowners insurance, that he helps me with a lot of my deals, and I'm able to close more deals because of them being always supportive and on the call. And that's how important service is to our business. Okay.
Thank you, Hadia. Yeah, thank you, Hadia. We appreciate the business. Yeah, we specialize in rush escrows and hard to place homes. So if you guys come across that, feel free to.
I always try to get a quote from him. And if even the clients have a high homeowners insurance, I always try to call Anthony and his team to make sure my client have the best. So, you know, if they can get better, I know I can get it from them. So thank you so much, Anthony. I thank everyone. I need to see if there's anybody has a question. Anybody? Hello. Hello. Because I wanna end this. Did I cover some of your questions, guys?
Yes, you did, Hadia. Yes, you did. Great information, Hadia.
Thank
And
you.
you are welcome,
you.
guys. I really appreciate each and one of you. And you always welcome whatever I can help you with. It doesn't have to be that I'm doing the loan myself. You know, I'm always available for any questions.
Okay.
Thank you, Hadia.
Thank you. Thank you so
Thank you.
much.
Hope to see you soon.
Thank you.
Hope to see you
All
soon.
right. Thank you so much.
Thanks, Monica. I was calling you a little bit ago, but you
I,
didn't
I
hear
was
me.
trying to unmute my phone. This is new to me.
I know,
But the
believe me.
information is very, very good. And thank you so much for at least being there and allowing us to ask you the questions and hearing the information that you offer.
I am gonna be creating some maybe Facebook groups that they just wanted to ask questions, or they having scenario that they don't know what to do with, because I believe it starts like, you know, whoever buying a house, they're gonna need a mortgage unless they are what, buying cash. So mortgage is a vital part of the big picture, you know.
Mm-hmm. Mm-hmm.
I love you guys. Talk to you soon.
Love you too. Bye-bye.
Bye,
Bye,
guys.
Hadia.
Thank you.
Bye, guys. Thank you for
Be
attending.
safe. Stay healthy. See you
I
soon.
am. See you soon,
Thanks.
dear.
Bye
Bye-bye.
bye. Thank you.
Thanks. Bye-bye.
Bye.